Okay, I am back. How's everybody? But before I go there, let's discuss the plan. No, I'm kidding. I don't know what plan do we have. Do we have any plan, you guys? Nah, sorry. I'm just killing time. Hold on, let me put some chat up here just in case people wants to see that. Who knows, who knows? You guys, okay, there we go. That was me. And then boom. I know there's a lot of people. Hold on. Haven't seen a lot of opposition lately, so just in case, one lurking around somewhere. So there you go. Let me take that off and open that over elsewhere. I know. It's hold on 1 second. There we go. Okay. Let's take a look at that. Gonna wait for a minute before people here. Okay. Alright, so I have a lot to talk about. I don't know if anybody's here yet. Let me look. Okay, 1%. It is, yeah. You know what? I'm just gonna do the show anyway. Okay, so what I wanted to talk about, obviously, just go revisit a little bit of the past, the interviews, Ryan Cohen's words of affirmation, I don't know, I'm just random words here. But I just applied for my credit card. It's coming next week, so that's good. It was a very easy process to go through. Like Moran said, I think Moran's did that also. So I'm pretty excited. We'll see how that would pan out. Very excited to take advantage of that 4% cash back. And we'll see. We'll see how good it's going to be. So anytime I need electronic stuff, I'm going to go to Gamestop, obviously. I'm supporting the company from that, and also organic growth of the company as well. If I don't need anything from there, I won't buy it, of course. But, again, I'm not gonna, go wild and crazy just because I own the stock of this company. I want an organic growth. So if I need something from there, I will get it from there, like my headset or something like that. Keyboard, something like that. If I, ever need to replace another keyboard, I would go to GameStop from now on. If it's still a discount, I love to see the discount, just like the stock, right? So, like I said, I'm not going to change my shopping habit just because I want to, support the company in that sense. Again, I want to see the natural growth of the company from that front, where can they drive their traffic organically, or they need to, incentivize people in some other way. And I think the credit card is going to give them that ability to at least, hey, we'll see, right? Will that drive up the revenue or not? But yeah, we've heard about a lot of concern about that, and I'm sure Ryan Cohen is aware of that, and he's addressing it right now. So, hold on, let me see who's here today. I guess not many people. Hold on, I feel like if I move this a little, just try to make sure people could see the whole thing. Hold on, let me make sure it's 2. No, it's probably too small, huh? Man. Okay, so that is a... You know what? It's not doing its thing here, so I'm gonna try a different route. Try to make this a little smaller so it fit the whole screen here. Give me a little bit of time. Okay, so that's that. I'm trying to get to the point where Ryan Cohen got in first. Yeah, it's not gonna work, huh? You know what? Let me steal some real estate from here so people could see it a little bit. Okay. Here we go. I mean, that's pretty close enough. I know somebody just got here. Hey, what's up, Jay? I'm gonna steal some real estate from you guys. Chat here. I wanna, again, like, reiterate a little bit here about some of the concern about top-line revenue and whether we're gonna be able to solve that top-line revenue, right? And so I'm gonna be, it sounds like we have 2 people, or echo chamber, so I'm gonna be preaching to the choir here. That's fine, you know, I love doing that too. But hopefully you guys are doing well today. Happy Sunday, right? I think that's what Michael is saying. Hold on, let me see. Yes, happy Sunday. I guessed it right. Okay, so let's look at this real quick because, again, I was like kind of looking to the concern that people had, and I did a video a little bit on that, kind of addressing, you know, the operation expenses. Like, it seems to be like a main concern of these people, right? And so I'm thinking, okay, so when was the last time we ever had a, you know, kind of exceeding expectation, so to speak, right? Meaning, like, at what point in Ryan Cohen's reign of power, right? Reign of power. I don't know. I'm just like thinking off the top of my head here. At what point do we even have an expenses that is this much lower than it used to be, right? And so I was looking at, you know, none, right? Like there's no point in time in which the expenses is ever higher or lower than the growth, right? So that's the problem that Ryan Cohen has to deal with. But then if you look at the history of the company, before Ryan Cohen got in, yes, at some point we were able to, like the company itself, right? So if you look at this is the red line, this is the expenses ratio versus growth. So this one is higher, this one is higher, this one is a little bit equilibrium. This is the time in which we were, you know, at the equilibrium point, so to speak, where our expenses is higher. Our gross profit is higher. But that was before Ryan Cohen got in, right? But then what happened to our net income? It's lower. It's massive amount of money being lost right here, right? So that's the problem that Ryan Cohen got to solve. And then also too, if you look at this one right here, even though we come ahead as far as gross profit is higher than the expenses, right? Operation expenses, what happened there? You still have to have other operational expenses on top of that. So you add it to that, but even then, we come ahead on this year. This is the Corona year, right? 2019 right there. And so, but we come out, net profit of $1 billion loss. So what gives? Why are these people still concerning about how expenses is higher, but then net income positive. Remember the narrative back then, right? It doesn't matter. The company doesn't make any money. Well, in actuality, we were making money then, but we were losing $1 billion. Why? Due to other stuff. Finance, right? We all know why. It was the goodwill value being depreciated, right? Goodwill impairment. That's what happened because of the stock price. We know that. But again, the company was making money then. But nobody wants to see that because they saw $1 billion loss, right? Let's fast forward to now. What is the concern now? Right? The concern is now you back to the fact that we are like this one is a concern now and not this one is a concern. So which one is it? You know, the gold post is moving so quickly that makes people head spin. But here's what's matter is the net income. That's what I come out to be, right? My own assessment, I think that the net income is doing great. The fact that we're cutting costs, that's a good thing for the company, right? Yes, it's bad for the employee, I get it. But if you look at every other businesses out there in the whole world, Apple, Microsoft, whatever, what are they doing? They're cutting jobs left and right. Have you heard about layoffs lately of those big businesses? They do that for a reason because they're, again, predicting what's happening. It's going to happen in the next few years right here, right? High inflation, high cost of doing business, whatever, right? But again, this is the type of stuff that Brian Cohen perceived already 3 years ago. But I'm trying to emphasize the fact that we did make money here. You know, even back in the time in which we were losing $1 billion, not because of the actual business itself, but because of, goodwill value. This is why goodwill value is such an important metric as well when it comes to taking an account whether you have a real shareholder value or not. I have that one as well. Hold on one second. Give me a minute. I want to. I hate this little bottom here. There we go. Boom. So now I have the scroll bar to scroll in and out. Sorry, you guys. Okay, so what's this? You mad? This. Yes, Excel sheets. I know, but it's an easier way to read those type of things. Okay, so I did this one also too, just to kind of reiterate my point a little bit here. So back then, when we were losing a whole bunch of money over here, this is a net income, I think. Yep, the green one is a net income. Right here, but this is like a quarter end, so it's quarter by quarter. It's not a trailing 12 like the other ones is. But even throughout the quarters, if you look at every quarters right here, you could see that the shareholder equity, if you were to take an account the, what is it called? Goodwill value right there. There hasn't been any time, if you were to take that out, your shareholder equity during that quarter is $3, right? And if you go back in time, it has never been over $3, right? There you go. 2014. So just to verify. So what I did there, that column, is that I subtract goodwill value from it, right? So fast forward until now, we have $4 a share without goodwill. And so this is a value created thing too. So just to emphasize that, I think I mentioned it in my other video too. Okay, hi Miko, thank you. We know they are going to move the goalposts. Yes. become profitable, flip negative $300 million to positive $6 million. Suddenly, PE ratio matters, right? Ignoring NVIDIA and all that stuff, like, yes, 10x its value. And of course, PE ratio is going to improve exponentially, from now on. I feel like people are not realizing that. It's like, if you look at the, what is it called? I'm trying to look at the net income right here, right? What they don't realize is that this quarter here is going to fall off. The fact that right now, at this moment in time, in a year time span, I'm not talking about, right here, the fact that we have, I think I showed that one before right here. This is the massive amount of thing. Hold on. Right here. Can anybody see that one? The fact that we have $50 million a year in net income, right? Interest income. I know people are like, T-bill doesn't really do anything for growth. I'm like, duh. We're trying to wait for the opportunity to come in. Again, like, why would you spend money when everything is overinflated? Like, makes no sense at all. Hold on, let me see. So if you were to divide that by 4, because that's quarter, right? This is per year. So what is that divided by 4? That's $12 million. So that $12 million is going towards the next quarter, right? Of course, it's going to be a little bit, like this quarter alone, we were able to make $15 million, but we did have more marketable security than the first quarter. If you look at the last year, we only have, hold on, I think 253, and then now, this end of this quarter, we have 277. So instead of having, so the snowball is going to come from the interest income that we have right now. And again, like I addressed it on my other video, is that Warren Buffett is doing the same thing because he's waiting for the opportunity. Perhaps he's been holding cash for 2 or 3 years now, and people are not like up in arms about that. Like, but I think Ryan Cohen have. He is taken after, I guess like an investment learning, from Warren Buffett as well, kind of following his footstep a little bit here. I'm not talking about like just every single footstep, but at least have some influence in the way he, invests his money, his $1 billion, his personal wealth here, And so, I'm sure he's copying the playbook of Apple, because that's why he's the most, shareholder for Apple. Apple does not have any goodwill to prop up their balance sheet, so that's why it's pretty solid, investment. But the reason why I don't buy Apple is because I can't grow my wealth, right? In my opinion, anyway. There's a lot of people chatting over here. But yeah, amigo, I totally agree with that. See you grinding. Keep it up. Oh, thank you. Hello. Hi, Menyo. Thank you. Jimmy is not going to deploy their money when the interest is that high. Yes, it's smart. Exactly. And they're talking about raising rate even more. Now, I know people think that the Fed controlled the rates, but it's actually the market. Like, if you look at the bond market, the rate wants to go higher. People are not going to buy our debt. Why am I hate this. Hold on, goodness. The government has been spending like crazy. And they think that the rest of the world is going to buy their debt at a lower price. So that's why the bond market is usually doing some gymnastic as well. But I seem to remember, right here, the 2 years Treasury bond is usually what the Fed is trying to follow, right? But this rate has been kind of flat or going up like 1 basis point, like here. This is going up 3 basis point recently, and then 25 basis point. And so the rate went higher. So when you see this red thing right here, that means it's not a good, quote unquote, good thing for the market. And so it's a good thing for people who have the money to stash it away and just wait, right? And this is the actual reason why Warren Buffett hasn't been deploying their capital, or, I'm sure Ryan Cohen as well. It's because they're risk-free compensation, risk-free way of making 5%. Like, for sure, you're going to make 5%, right? But if you go out and deploy that capital, you might lose everything, right? Or whatever. And not only that, you're going to show on the balance sheets as a quote-unquote cash burn, so to speak. So it's not really, or intangible asset, so to speak, right? When they acquire something, that is going to count as a goodwill value. And that's, again, that could prop up the balance sheets a little bit. I get that, but that's not what we want. We want a real asset here, in my opinion anyway. And so, yes, just be on the lookout for, instead of rate cut, the Fed's gonna hike the rate. Just expect that. And when that happens, people are betting, okay, that the SPY is gonna come down with it as well. And when the SPYs come down, I have a theory, my own self here, that the panic's gonna ensue as well. So, hey, I always said, prepare for the worst, hope for the best type thing. So, if the stock price come down, we all know what we're gonna do. As an investor, that's a good thing for us. But anyway, now I was looking at this one. Let's talk about the short interest thing. Since I have you guys' attention here. Hold on, T-bill aren't sexy, but I'm making around $2,000 a year. Or interest rate. On interest rate, I'm keeping buying 3 months, yes. I mean, any money coming in is a good thing. I know it's not sexy to earn 5% a year. It's like, who cares, right? But that's a sure way of not losing wealth in this quote-unquote frothy market, right? It's a high risk. Like, if you want to buy at an all-time high of anything, that's not a good thing. Yes, it could increase in 20% more, but you're risking 100% of your capital here in order to get that 20%, higher in the S&P 500. And so that's why, most people are very cautious on where they're going to, and I'm sure you've heard of Warren Buffett. Who's the other one? Other executives out there of other company, they are selling their shares like crazy, and so they're not convinced that the market's going to go higher. I don't know if I'm sure they're going to stash their money in the treasury bond as well, and so. Yeah, I don't know the dynamic of it too much there. The dynamic, am I having a stroke right now? I can't even string a sentence together. Gotta know when you hold and when to buy. You want that in your CEO? Yes, of course. I'm in CEO with disability. I have no doubt that Ryan Cohen's would be able to solve this problem, right? Now, I get it, there's challenges ahead for Gamestop. I'm not saying it's going to be smooth selling from here, because the economy that we're in right now, there's a lot of businesses out there that are hurting, especially the restaurant business right now. You've heard of the $20 an hour debacle, right? And of course, yes, it's good for the worker. I applaud that. But again, that's going to do some damages to the whole economy as well. I mean, to me, if these people are actually trying to help the working class, all you have to do is just change the tax structure. I mean, the tax incentive, you could, again, but anyway, that's a different topic here. But I think the corporation out there, they have the ability to offset it, especially the people that are, corporation like McDonald's of the world and Burger King of the world. Again, like anyone that has the big pocket, deep pocket, they're going to be able to kind of survive this downturn. But the small businesses out there is going to be suffering from this increase in wages, right? The best thing that they could do to help the working class is, like I said, change the tax incentive. How about tax them a little bit, to the point, like or how about stock buyback? Like, make it so that the company, that big companies out there cannot do a stock buyback. Make it against the law, or make sure that, hey, unless the company give their employee this amount, how about 80% of the whatever? But again, you could do a lot more than just the wages increase alone, because if there's no need, there's no use if you're making more, but then you have to pay tax more. Working class actually pay most of the taxes than the businesses out there. And that's why, again, like Roth IRA and all that stuff is very important for a regular working class to learn about, because that's tax incentive that you're not going to be burdened with the tax. But the more people going to find out about the Roth IRA, stashing away and investing and all that stuff, they're going to change that tax incentive, because again, they're not going to, let kind of 99% of us know about this. There's been incidences where tax code changes once people knows the tax loophole, so to speak, to get ahead a little bit here. But anyway, that's a different topic here. Okay, so let's go back to GameStop. Sorry about that. But anyway, so let's so I've been watching this guy. Now I've shown his video before. He talked about SoFi. This is a good time to buy, obviously. He is an investor and also option traders. He has this strategy that, he sell on the course or whatever. I don't know, because I'm not part of the course, but hey, to each his own. If you want to learn about it, go ahead, go crazy. The reason why I am interested in this particular video, now he had this indicator before, but let me play a little bit here so you understand what I'm about to show you here.
20% up, and on the previous one, but before that, 26%. Why these big moves? Well, it's got a lot to do with the fact that SoFi is shorted massively. And there's an indicator you can pull up called short volume stamper in TradingView. You're going to go into settings and change the input from Quandl to TradingView. And then with a bit of praying and wishing and hoping, there we go, there it is. And you see that it's shorted about 19% right now. We were at 26, 25%. We're at really 28% here. And the higher that number is, the more they surprise to the upside, the bigger the pain for the shorts is, which of course we quite enjoy. But where is
So what do you think I'm going to do? So I went and looked for that particular indication or indicator for GameStop. And what do I found? You know how people are saying, GameStop is over. This is not the same as 2001 and Nobody's shorting this thing. There's a reason why it's being shorted, right? Because it's a shitty company and whatever, right? Okay, whatever. It's a shitty company, sure. But to say that it's over, this is not the same thing. I feel like it still is, right? But again, I'm trying to stay away with this topic because I cannot prove it. I don't have the actual number. But again, this is the indicator that gentleman was using. He claimed to be a pretty well-known, not well-known. He used to be an ex-banker, so to speak. And he used this this indicator to trade, as he was speaking about SoFi being being shorted 18%, right? What is short interest for GameStop if you use the same indicator? Assuming that this indicator is going to be accurate, right? Who knows? But right now it's 28%. Every other, institution out there, they kind of report it around here, right? So 23, I see 22, all that stuff. So why is it 28 now? And if you look at this one right here, short volume ratio since 2 years high, 25. So there's different numbers here, but it's over 20. What did he say about 18 shorted and how it's going to do to the price? I mean, come on. So if 18 is going to do something, what do you think it's going to do for GameStop? But again, like, this is a suppressing information that people don't want you to hear about, right? Again, I try to stay away with this one because it has nothing to do with the company itself. This is just the price movement. That's why I only focus on the fundamental of the company, because if the company is doing better, price coming down, people will take advantage of it, right? And people are in the know who understand that the price is not the stock itself. They will see value in this company eventually. And so that's my logic there. But I just thought it was interesting to kind of hear this particular indicator. So if you look at the dollar, in terms of dollar, so far it's been $169 million right there. So they continue to double down or shorted it and all that stuff. But again, they have the ability to kill the momentum as well. Anytime there's buying order, you could see that there is they have to short it in order to bring the momentum down. And on top of that, you have, people who tell you that, hey, this is over. You have Tony De Niro, live stream on Moran's, predictions and all that stuff, trying to make fun of the guy. It's like, come on, Tony, we all know, like, I watched Tony before watching Moran's. And I seem to remember when he was talking about AMC at the time. It's like, oh, buy and hold, as long as retail is in it, I'm going to be in it forever. If retail is gone, I'm going to sell out or whatever. But again, like, he's still until this day advocating people to buy into AMC, right? Now, you could, make your own argument about AMC. I already make my own mind already. AMC is not a good company because of Adam Aaron. The reason why I jump out, it's not because of these people telling me to jump out. It's because I do my own analysis on the decision of the CEO here. And so I come to the conclusion that Adam Aaron, some of it, catalyst for that was Moran's channel, right? And so, but on top of that, I did my own research. I did my own assessment on his decision, the Adam Aaron decision to do a whole bunch of stuff, right? And all of it, again, it's just a fluff. Like, I've explained that sentiment before, but anyway, let me move on to this one. But anyway, so tomorrow is going to be a trading day. Just be prepared. There is a lot of prediction that the SPY might come down. I know, I say that all the time. But it is an all-time high type thing, right? So let's see this indicator about SPY. What is happening there? It seems like 11% shorted right there. Short volume, so shorted 11%. Like, that's it's so weird though. Like, it's shorted, but the price come up, go up. Short squeeze, perhaps. I don't know. So this indicator is pretty interesting. So just check it out for yourself. Okay, let me turn this off real quick. So, of course, on Thursday right here, this is the scares. Some job report comes out, and But again, the job report, it wasn't really a real job report. Remember, they're reporting 300,000 job was created in the last month or something like that. But keep in mind, those are not full-time job. It's probably counting for people who have 3 part-time jobs in order to make ends meet here. So that's not a good economy to have. And on top of that, you have the expectation that the Fed was gonna lower the rates, and the market right now is kind of accounted for 6 or 7 rate cuts, and so that there is a discrepancy there. And so the prediction is that, the speculation is that the SPY might come down just to kind of offset that, if the Fed is not gonna lower the rate in June, right? So be prepared for that one. If the SPY comes down, the panic's gonna go to Gamestop as well. Okay, so I hope they push for the holiday season. If not, that's the great run up. Quarter 4 is a strong quarter, yes. The followed. So you have a new game coming, right? So that's a Grand Theft Auto 6, PS5, next generation, comes out in the late, 24. Is that gonna be like Black Friday sale or season? When is it gonna come out? I thought it was gonna be 2025, Grand Theft Auto. This will be a big spike on revenue. Tony on Twitter was posting his buy order for AMC at 25. It is now 30 cents. Oh man, yeah. Tony is a Marantz. What is that? Butthurt Marantz was right about AMC. Yeah, of course. All over my Facebook friends looking for part-time jobs to survive. Yes, of course. Like, this is not the economy that, of course, the media is, bought, and so they tend to, speak of the, I hate to say propaganda, but it actually is a propaganda. If you say the economy is doing well, but for some reason you're still struggling, if you're struggling, it's your fault, because you're, dumb and you don't know how to make money for yourself or something like that. Like, oh, people are making money. The only people who make money are the people who have asset, right? Or the crypto, stock market, or whatever. But those people are not working to get that, right? And so, and this is why Brian Cohen, speak about it. So that's a good segue to get to. Now, I know you guys remember this interview here, but it's worth revisiting because he's speaking about GameStop, how difficult it is and what is the challenge on GameStop, right? And this is 1 year ago when he did it. He was still a chairman at the time. He wasn't a CEO yet. I'm not going to play the whole thing, but this snippet is worth listening to. So let's go.
Can you talk about what building Chewy meant to you and what you learned from that experience?
Can you hear the dog in the background?
Yeah, it's perfect.
It's a real dog, by the way. It's not just sound effects.
Yeah.
What did I learn from Chewy? Chewy was hard. We built Chewy in Florida. It was very hard to raise capital. We were a bunch of nobodies. It's like 3 states basically account for like 75% of venture capital: New York, California, and Massachusetts. So raising capital was really difficult at Chewy. Attracting talent was very difficult at Chewy, especially being in Florida. The talent pool was pretty limited. And we were selling 30-pound bags of pet food online. And so that wasn't very popular either against the backdrop of pets.com. So first, everyone said pets, you can't make the unit economics work selling 30-pound bags of pet food. And then once we had positive unit economics, everyone said that Amazon was going to crush us. And neither of those things were true. But it was very, very tough. It's a low margin business. Part of the secret sauce was just how we structured it. We had negative working capital. We took the business from like 200 million to 3.5 billion. We burned through less than 150 million of cash, even though we accumulated significant losses. We turned our inventory over faster than our payment terms. But granted, going head to head against Amazon, selling 30-pound bags of pet food in the mail, tough business.
Yeah.
GameStop, on the other hand, in many.
So let's address that real quick. So he was telling you how it was a struggle, right? But he succeeded through against all odds. Okay, against all odds. Because again, those goalposts that they're moving, oh, you would never do that. Oh, you never do that. Oh, you never do that. But throughout every stage, he's been able to do it. None of those criticism is true about Chewy at the time. And now we know what Chewy is because of him, because of this guy, right? How is that luck? These people are saying, how is that a failure? This guy is a failure? Are you telling me? It's come on. Yahoo Finance? What the hell? Anyway, let's go back. But anyway, so he was saying that the secret sauce for Chewy was operating in a negative working capital, right? And then was able to expand it, turning inventory faster than the payment. That was good, right? So what makes you think that GME is not going to do the same thing or will be able to kind of turn inventory faster than the payment? He's trying to do that right now. So inventory right now, if you look at the metric right there, let's look at it real quick. I know terminology sometimes kind of get over people's head, but inventory, blah, blah. Hey. Sorry about that. Okay, so, oh, that's not it. Stats, right there. Right here. Inventory turnover. It's just a unit of a number of time the unit has been sold and replaced during a time period, right? So the lower, the better. Okay. And so we're up to 6 right now, so we're trying to do it lower than that. But hey, 6 is good. But if you look at other retail store, so let's compare that one. Let's do Target. What is Target? Target is 6.15. No, 6.125. So GME is at a little bit lower than that. So we're faster at turning over inventory. But in my opinion, he could do it a lot lower than that. So that's what we're trying to ramp up to be. But okay, let's listen to what he thinks about GameStop. Right?
Against Amazon, selling 30-pound bags of pet food in the mail, tough business.
Yeah.
GameStop, on the other hand, in many ways, Chewy was like a new construction. We built the business from the ground up, knew the business inside and out. GameStop is different. We inherited a bunch of legacy everything and underinvestment across the entire business, people, the entire technology stack, just decades of neglect. And so it's hard to turn around a brick and mortar retailer that's under the kind of pressure that GameStop was and continues to be under. But that was also part of the attraction going into GameStop, was that a transformation the likes of GameStop was really unprecedented. And I was motivated by that. And, similarly, selling 30-pound bags of pet food in the mail was also very unpopular, and we figured it out. So, yeah, I like tough things. I don't.
So again, I don't know. I don't understand how people don't like. I fell in love with him just listening to that. But it's just again like the challenge that is presented towards this person and the fact that he's a solution-oriented person. Okay, and that's what I feel like this is the leadership that you want in your corner, want to have in the company, in everything that you like in your life in a general, right? Is that you have a person that see the problem and then they want a solution to it. The news media would love you to think that Ryan Cohen is so incapable of doing that. They know the problem of GME, right? They know the problem. I mean, they know that GameStop has a challenge, has a problem right in front of them, and they assume that because of this problem, nobody could solve it, especially Ryan Cohen. Ryan Cohen cannot solve this, right? That's what the news media would love you to think, and to stay away from GME because nobody could solve this problem, and that's the attraction. Just like he said, well, I like challenge. Well, let me see if I could solve this problem. When most people are running away from problems, and this particular one at that, for some reason, let me try to solve it myself. And that's what he do. And that's why he's a CEO now, right? And of course, like when he go into this company, I'm sure he was naive and thinking, oh, okay, it's probably a huge challenge. It's probably going to be some of this, some of that. I have experience. Let me try to see if I could solve it. I'm not saying that this guy is a god or anything like that. I'm just saying that he's a solution-oriented person that see a problem and he's not going to run away from it. And this is exactly what he's saying. This is the opportunity. When people are kind of like, get off of the table already and they're saying this company is not doing well, nobody's going to solve it, let it go bankrupt because nobody could have solved it. This is the vacuum that people are not going to take care of, to even look at it, right? And when that's happening, you create a vacuum and opportunity for people who will solve that problem, right? And so it's going to be a long time. Like he said, it's going to be a challenging road ahead. It's not a rosy, brick road over here. But if you have somebody who solution-oriented, I'm sure he's going to solve those problems head on. Whatever it is, whether it's the executive that is not doing their job rather than, dedicating their tasks to other people so that they could reap the benefit of the, working class and all that stuff. And so this is why, executive that just left, perhaps that's what they're asking for a raise, and Ryan Cohen said no, right? What have you done for the company, right? And so, and those are the things that he was saying about, the right talent to turn this business around in a meaningful way here. But anyway, so hope that makes sense. Okay, so TGA 6 release target date January to April 25. Yeah, that's what I thought. But the console is late 24. Second half of he likes the challenges, he owns shares, and he's working for free. Yeah, I mean, what more can you ask for this type of the likes of him? And here's the reason why he doesn't talk too, but he talked briefly about it. And what did the media said at that time? I remember what the media was saying. Ryan Cohen attack Wall Street, attack other CEO and all that stuff. I'm like, bullshit. But anyway, so listen to this one. This is the shareholder meeting speech that he had. It's only like a short speech, but it's worth every minute of your second of your day to listen to this one. And this is why I like the guy.
I will speak briefly. My father always told me, talk is cheap, actions speak louder than words. My responsibility is making sure GameStop is run by managers who treat company money like their own. In corporate America, the people in charge, the professional directors and management teams, are not aligned with shareholders. They are always the recipient of stock grants. However, they rarely purchase company shares with their own savings. There's a big difference between risk-free compensation for showing up and putting a meaningful amount of your own money at risk. As a result, money is wasted, work is delegated, and a lot of time is spent managing to short-term expectations and pandering to Wall Street. I like people who roll up their sleeves and do real work. People guided by principles, not robots who seek to rest and vest. In corporate America, there's no shortage of overpaid executives, bad capital allocation and chronic waste, and serial delegators. Much as this behavior is both predictable and reprehensible, it is precisely what creates opportunities. Thank you for being a shareholder.
More than 40 years.
I will speak briefly.
Sorry. But yeah, so this is exactly the exact CEO that every single Americans out there should be for. Every single human being should be for. This is the capitalist, capitalism that I want in America. And it used to be like that. It used to be that, you have a hardworking people who are from a middle class, from whatever, from middle class, or, from whatever, like poor, whatever. As long as you have an idea to build a company, to do something, right, with your life, and able to be successful at it, when you're successful at building a business or whatever, you get rewarded, right? But to do that, you have to do the hard work to get there. But then, you have another class of executive out there that only leeches off of the backs of, working class. Because the working class is actually the one that built this company or this country or whatever, the company, if you look at it at that angle. And so this is why the executive out there, they're just there to leeches off of other people's work, right? And get all of the accolades, get all of the, investment class and all that stuff. You have Larry Fink of the world. You have the J.P. Morgan, J.P. Diamond of the world. You have, who's this guy? Mike Milken of the world, right? I never know what he looks like, but I feel like Milken. This guy. Of course, he went to jail for doing something, but now everybody is just saying he's the best. Donald Trump, I guess, pardoned him or something like that, but it's more political than anything. But of course, if you search his name, what he did. But something about fancy information, junk bond king, right? So this is the private equity angle type of thing. This is the financier that just go around and gut company from within. And we all know, based on private equity angle things. But anyway, so people would much rather, like CNBC and, all of these financial people are probably bought by these people too. And so this is why they elevate people like this to be the top, right? But in actuality, they're not there to create any value at all. They are there to extract the value from companies, from working class, from the company that was supposed to be there in order to provide goods and services to people. Like GameStop, for example. Serve gamers, whoever wants to shop at that particular place called GameStop is going to be able to do that. But they would much rather bankrupt the company in order to build it, because it's much easier, much quicker to get the cash out. And this is why, again, private equity get to win 99% at the time, anytime they go into any company, because of that extraction. And we all know the playbook because of Marantz, and of course other people are talking about it as well before that, even before the whole GameStop thing, right? It's nothing new, but people just not aware of what's going on. They just knew, hey, why is the richest country in America, America is the richest country in the world, how come we have homeless people everywhere? How come all of these retail stores and, the Sears of the world, Kmart, Walmart, how are they go bankrupt? I mean, what, right? And again, like they would just say, oh, Amazon, oh, it's online shopping, oh, it's this and that, without looking into the hood. You wouldn't know what the playbook was. I'm sure Sears would have been still around, competing with Walmart, with Amazon right now, if it wasn't for these people going in, like Bain Capital and all that stuff. We all know the story. But yeah, people seems to forget all of that for some reason. Like in 3 years, people are like, this is over. It's like, no. The story is still on. Nobody really understand what this company represent. And I think, again, it has every single angle to it. Not only that it is a good company, it's actually a business model that works. Of course, it's going to be challenging to make retail the way that it used to be. Because, again, the economy is not doing well. So people are struggling. People are not having extra money to buy anything extra. So the fact that we're in a discretionary spending category is going to hurt us a little bit here because of the economy. But again, we're not burning any cash right now because the operational expenses has been decreased for quite some time. And now we're at almost at a equilibrium here, right? Not quite yet, of course. People would like to point that out, okay? Sure. But we are losing less than we used to in terms of operational expenses. So the last time we had a positive operational expenses was back in Corona time, right? Right after it, two weeks from that. And so you have to understand the economy back then. Nobody could go to work at the time, so of course operational expenses kind of come down from that, logistic and all that stuff. So it was a different economy back then. Perhaps there was some stimulus check and all that stuff, and people would spend money because of that. So there's different dynamic back then. Just to put it in context here, right? Now, if we look at the last time we had a positive was 2018. So positive net income. So the fact that we are net income again, that's not a small thing to look into. Of course, they want to minimize that. It's like, it's only $6 million in a year. It's like, okay, well, are you 5? Can you do a little bit better math here? Or at least projection. I thought the stock market is about forward thinking, right? But for some reason they want you to think about 12 years ago. Gamestop used to be a terrible company. Like, just think about that and sell now, because they're never ever going to be a better company. They would never beat certain things. But I'm curious to see what the goalpost is now moving forward. Let's say next quarter we're going to post I don't know, net. I'm expecting maybe $10 million in the plus. I feel like I'm optimistic on that. Let's see. So next quarter, if we were able to kind of come ahead about $15 million, of course Wall Street expected us to come down from there. Let me see what their expectation is. Oh, that's a good segue too. I know I'm on here for a little bit, rambling on and on. right here. So Wall Street expectation is 9 cents, negative 9 cents. So what is that? If you do, I think they increased their float a little bit there. So that's $27 million loss. That's what they're expecting us to do. So even if we could come out flat, meaning zero loss like we used to do right here, right? Last quarter, 0 cent. No, not last quarter. The 2 previous quarter 3. We were coming out flat, technically, right? And so if we could achieve that again, that would be great. We would be beating expectation on the earnings. Now, if we come down from $1.4 billion, that's going to hurt us a little bit there. I'm sure the narrative's going to be the same. Oh, look, they're dying. Even though we're posting positive, net positive. But let's say if we're coming out flat, right? So flat, then the trailing 12 would be, if you do the math there, if you do plus, right? And then let's say we're coming out flat, the next trailing 12 would be $57 million. So, I mean, is that a good income, like, for now? For just the trailing 12 aspect of things. And that's another thing that people don't realize, that that's what's happening. Next quarter, this is going to be a lot higher than $6 million. So if we make something, let's say we made, instead of losing 27 million, we come ahead at 15 million. So if you do 15 million, what is that? That's going to come out to be trailing 12, $72 million in the plus. So that's going to be improving on the, PE ratios and all that stuff. And I'm curious to see what they're going to come up with, right? And also too, like this one right here, the operating expenses, it's going to come down even more. Remember, we were closing the York distributing center. So that's going to come ahead to cascade to the lower the operating expenses for quarter 1. So that's going to be even lower. Now, I did this projection here, assuming that we're going to lose 20% from there. That's what this one is. But again, like, that's just assuming that we're going to lose 20% from last quarter here. But Wall Street projection is 1.0 something, $1.0 billion right here, $1.045 billion. So if we could beat that and beat this, we'll see what the goalpost is. Okay, let's see. I would be interested in GME if it wasn't for Ryan Cohen. Yeah, I mean, yes, that's a good assessment for my own thought process as well, right? Because leadership is important when it comes to investing in any company, right? And of course, the industry. The way that the leadership is kind of leading the what is it, the spearhead, right? You really, like, company could really succeed and based on who running it. Now, anybody could maintain, a good company already because it's already kind of have its structure, right? And so if it's rare to find a CEO that, number one, are a builder themselves, like he knows what it's like to build a company from a ground up. So now his next challenge is to scale a company, because he hadn't done that yet for Chewy, which is, the media would love to point that out, that he had no experience, right, in scaling yet. So that's why Chewy wasn't profitable. And so that's why they run those stories to tell people to stay away from the company, because Ryan Cohen is a failure. Because Ryan Cohen has no experience. Because Ryan Cohen is too young, whatever, right? But he's young enough so that he could make mistakes, right? And if he makes mistake over and over again, what do? You get stronger. And so, yeah, that's the challenge of investor. But I think, he is surrounded himself by smart people, and so I don't imagine that he would just make that decision by himself all the time. And so if he is, surrounded himself by most talented people who wants to work, roll up their sleeve type thing, right? And if you want a rewarded shares, make sure that you deliver, value to the company. And so that's the challenge for him, to find those executives that is willing to, buy their own share, use their own money to buy the shares of the company if they believe in it as an executive. I think that's a good principle to have in a company, right? Because, like I said before, that's what capitalism should be. None of these leeching, off of other people's work due to the financier of things, right? Just because you have, money for the businesses, struggling business to own, doesn't mean that they get to gut the company from the ground up, from within. And so, he's trying to change the landscape of the corporate America here. And that's what I respect. It's not an easy thing to do. That's why, 3 years is nothing at all. But even then, just the time frame itself, I think 3 years is a very short amount of time to try to turn this company around. But he's succeeded already, in my opinion anyway. He succeeded last year because guess what? He was posting net positive for the first time last year. $48 million in the positive for the fourth quarter. That was like already a success already. I mean, the first milestone was cash flow positive, right? We did that even before this one. And then the second milestone is profitable quarter, net positive, right? First profitable quarter. And then now it's trailing 12 positive. So we're inching towards success every single time. Like, we've already at least 3 milestones already. So we're on the other side of things. So how many more milestones do we need to reach? Well, only Ryan Cohen could do that. And he needs people to support him in that sense. And of course, the next milestone would be trying to get to the S&P 500, right? But before that, perhaps a dividend, or actually the next step would be trying to get 3 quarters in a row in a year to be positive, net positive. I have no doubt he's going to do it. If it's not this year, it's going to be next year. So we'll see. We'll see. Yes, I agree with you then. Okay, got great presentation by Ryan Cohen. Yes. Let's see. People are definitely rising up. Yes. I mean, I understand that, but sometimes, it takes people so many times to explain the same thing for them to get it, right? And it might take another couple years before people realize what's going on in America in terms of the corporate raiders out there, right? That the reason why we are highly in debt right now is because of those decision that was made decades ago by congressmen, by whoever, that are not really care about the private equity angle of things, right? And on top of that, you allow those big money to have influence in the political, space, and government official who have a revolving door. We all see that it's happening. What the chairman right now is private equity. Who's the other one, like the Speaker of the House, right? Or some sort of a financial committee person who in charge of the regulations on these type of instruments, like are involved. It's like everybody has a hand in the pots here. Nobody really, and this is why nobody really wants to regulate anything in the Wall Street for a long time. It's always like, oh, those people are important and all that stuff. That's why we don't want to kind of disturb the financial, Wall Street. Nobody wants to go against Wall Street because they can't, right? In their opinions, right? Whether they want to keep their jobs and all that stuff. I was like thinking about the financial media too, and there's a reason why they, going after a certain leader, a certain people, a certain company, because they get paid, right? Anybody with an eyes who know how to evaluate the company would say that this company actually is not going bankrupt, right? They have changed their tune a little bit still, right? But it's still like there's always a negative spin about this company. Oh, they're not making enough money. Right now it's like, oh, the reason why they make money is because of the marketable security. T-bill was like, okay, well, they make money. Isn't that the point of the market, is to, of the company, is to make money? Like, okay, they're not making enough. Right now they're not making enough because they're trying to build something. They're trying to, like Brian Cohen said on that interview, it's decades of neglect over here. Underinvestment. Technology wasn't there. Okay? Like they didn't use the technology that was needed to turn the company around. They were neglected. And so it takes some time to rehabilitate a company back to normal again, to normalcy. And then when it's back to normalcy, they're still facing an economy ahead that is not it's not looking good for the discretionary, sector of things. And so that's another couple years of, perhaps another inflation round is coming because the Fed is not willing to do the right thing, right? They can't raise the rate because something's going to implode. They can't lower the rate because something's going to implode. So no matter what they're going to do, I don't think they could save the economy, so to speak, right? And this is why you see the gold price going up despite, dollars going up. That's a bad sign right there. I know people are not understanding this. I don't know. Again, I'm just repeating, what I've heard about people who are like much smarter than me, who say those things. And what did I see about? Hold on, let me see. I saw something right here. And so this graph right here, if you look at this is the discount borrow window, right? This is to the trillions of dollars. So this is the highest it's ever been, just recently, right? The last time that it happened, right there, this is 2008 and 2009, right there. This is Corona, right there. So right now it's happening again. So what do you think is going to happen? When that window is closed, it's going to ensue something. So the drop is coming. That's what people are expecting. It might be a couple more weeks for the SPY to do that thing. And so that's why I always try to prepare you guys for that drop right there. I know it may not happen, but the last 3 times or 2 times that it happened, it was ensuing the same panic. not to say bet against it, not to say short and anything, but you can't time that either. The only way that you could short something is to buy put, but buying put has its own risks too, because of the IV crush and all that stuff. And if you don't understand the IV crush angle, make sure you understand that before you buy put on anything, right? Including GameStop, including AMC, including anything, if you want to do that. But to me, I'm just looking for the opportunity to accumulate more shares. To me, that's the safest way, especially in the company that I know a lot about, which is it's just so happened to be GameStop. That's why I talk about it. That's why I follow it. That's why I try to advocate it to people that I care about, and so. But yeah, so those type of chart is happening. As you can see here, people are trying to. This is the trading card that GameStop is selling. It's, I guess, fly off the shelf. This person right here is trying to do starting a contest, giving away 1,000 worth of this trading card right here. I'm not gonna be enjoying. I'm not gonna join in. But if you guys want to take advantage of it, go ahead. I don't care that much about this. I know you could win like crypto and all that stuff, like one whole Bitcoin or something like that. But yeah, I'll let other people do that. Let's see. What else did I see? And of course, asset price goes up like crazy. Housing market, I know, like people, I don't understand that either. So the S&P 500 right here exceeded, the valuation that is other stuff. So corporate bond, you have gold right here. So either gold had to catch up to the S&P 500 or the S&P 500 had to come back down. So either that is happening. Real estate's down here. So real estate has returned 5% on average annually over the period of time. So this is outperforms everything else. 3 folds, so 3 times higher than everything else. Usually that's the bubble, right? That's the bubble. We don't want that. This is when the .com bubble right there. See, .com bubble. Anytime there's like deviation from all of these assets, it snaps back down, right? So it's like if you think of the corporate bond right here as a kind of leash, so to speak, a magnet, it's gonna snap right back down to that valuation right there. The same way with gold, right? So it doesn't deviate too long. How long did it take for it to snap back down to? So takes around 5 years or so? No. 6 years, right? If you look at the lowest right here. So it's due for one. It's been more than 10 years already that it's been kind of going crazy right there. Yeah, something gotta give. Something's got to give. So if the Fed comes out and say, we're not going to do anything, rate's going to be still where it is, not going to do any cuts, stock market's going to react, right? And when it reacts, it's going to be fast. People are predicting that and all that stuff. All right. Let me finish up the comment here. I agree, once you have the system in place, it can take time to adjust, and the company with new data, yes, year 1, year 2 is just uploading everything or updating everything. Ryan Cohen and team will try new things, and when they work or don't work, they will make adjustment. Yes, it is. This is why leadership is so important. Exactly, and on top of that, he had the minds for it, the stamina for it, and the patience for it too. I mean, can you imagine like running a company and all they say is, "Oh, you're running a shitty company," right? But I think that's the fuel for him. Like when he was running Chewy, he met with all of those criticism already, and so he used those criticism to be a fuel for him to run. And this is fun for him. And this is good for shareholders and people who support him, who understand what he's trying to build here. And we're going to get to reap the benefit, years down the line. All you have to do is just be as patient as him. If you understand where the company goes, you would do everything you can to, at least accumulate as much as you can. Only if you believe in the company future here. I'm not saying that the future is bright, so bright that it can't, be stopped. I also, want to be realistic here, because again, the industry here is growing in that sense, but it's one of those things where it still have some challenges ahead. The software issue thing seems to be the focal point of these people, but I think what they don't understand is that Ryan Cohen has a solution for it. There must be a solution to make this company more viable, more growth oriented, right? And I think he has a lot of avenue to get to because of that cash position that he have. $1 billion is nothing to scoff at here. People need to realize that. No company has this cash position. They always said, like, in the hard times, cash is king. And so that's why Warren Buffett has a huge cash position, unprecedented cash position here, in order to take the full advantage of the drop. Can you imagine though, like if the S&P 500 drop and the valuation of Apple is half? Don't you think Ryan Cohen's gonna make some move here? Maybe buy, Apple at what is it right now? Freak. What is it right now? At a low price, Of course, I was like doing my own prediction here. I didn't trade Apple. I was just doing my own thing. But yeah, can you imagine if the S&P 500 snap back down and people are panicking and Apple is coming down here back to $80 a share, right? I mean, come on. GameStop probably like, oh, let's go all in on Apple. Boom, done. All hell break loose type thing. But I don't know. Again, having cash on hand is a good thing. It's a good thing. To weather the storm, whatever it is. Alright guys, so it feels like I'm preaching to the choir here. No opposition whatsoever. Yeah. I hope you have a good rest of your day. I'm gonna go and eat because I am tired. Low energy right now. But yeah, thank you for tuning in. I appreciate all of you. Yes. Happy Monday. Happy work week. Go back to work. Make more money. Buy some more shares if you want to. If not, wait until it's single digit if that's what you want to do. That's on you, but there's no question that the company is doing much better. All right.